Hello everyone. What is the difference between an ETF and an individual stock?
Hello and welcome to Chats with Tati. Views and opinions expressed on this channel are not and should not be considered as financial advice. Your girl is not a certified financial advisor and not registered with the FSCA. I am simply here to share my journey with you.
So when I think of an ETF, it's like a sandwich. You have your lettuce, you have your tomatoes, you have your cheese, you have your ham. What can we put on? And you have your bread. So yeah, we have this wonderful sandwich that we have, and this is like your ETF. So all these different ingredients are grouped together in order to make this sandwich. So an ETF is basically a group of securities that are bundled together in order for you to purchase one ETF with various securities under it. So for example, we have the S&P 500. It's a well-known ETF. It consists of the top 500 largest companies in the US. On that specific ETF, you'll find Apple, Tesla, Adobe, Microsoft, just to mention a few. Also, there are ETFs that are industry specific. So if you want to invest in an ETF that only focuses on IT or probably sustainability, there are ETFs. You just have to look at which companies are under the ETF, which listings do they have. I'll put on another video on how you can look or do research to see whether an ETF is worth investing or what industry it's under, or what are the management fees. There are different things that you need to consider before you invest in an ETF. We'll be going through what it takes to own an ETF, what are the pros and what are the cons, because when investing, you have to know exactly what you're getting yourself into, right? So yeah. So what are the pros and the cons of owning an ETF? Firstly, it's passively managed. You don't manage the different individual companies. You don't have control over managing it. You just invest your money and you rest. That's basically it. You just invest and you do track the performance of your ETF, obviously, but then you don't do much when it comes to shifting around or trying to see what to do. Your ETF is diversified. Like I said, the S&P 500 consists of 500 companies, 500 of the largest US companies. So imagine owning a little bit of all these different companies. So an ETF also, you buy a single share or you can buy a fractional share. What do I mean by that? So if a fractional share, this is when the share price is high and you can't afford it once off. So you can buy a fractional share and you can increase your shareholdings as time goes. Say for instance, the S&P 500 share price is $50, right? So you would take $50 and invest it into the S&P 500. Investing that 500, it means that you own part of all these different companies. There are different sites that offer these services. So just have a look at sites that do offer you to buy a fractional share of an ETF that is lower, which means you can afford it. It is for people who can't afford a once-off fee. Sometimes it might be high. An ETF can be sold at any given time during a trading day, or you can look at other ETFs that focus on covering a broader spectrum, covers international markets and international companies. If you do invest in an ETF, it gives you that comfort of shared risk. Don't really focus on one particular company. So for instance, you just don't focus on Apple, how Apple is performing, because you have 5 or 499 other companies that you're looking at or that you have invested in, and your performance or your profit or your growth is not just based on one company, but on various companies and on various factors, as opposed to an individual share. Let's delve into individual shares. What is it and how can you buy them? So individual shares is I think it's self-explanatory. It's a single share that you buy, or multiple shares but of a single entity. So you would probably say, I want to buy a share of Apple, or I want to buy 10 shares of Apple. Individual shares, you have the freedom of choosing which companies you want, how many shares you want to buy into that specific company, and you're very specific as to what industry and what company you would want to buy the share from. It gives you that freedom of choice as to what company you would want to buy in, how many shares, how much are you willing to share, how much are you willing to invest, And also it depends on your risk appetite. So are you a moderate risk taker, or are you a high risk taker? Are you a low risk taker? So all those factors will determine your growth. Whether individual shares, you don't pay any management fees. However, with the ETFs, you do pay management fees because someone else is looking at how they can group the companies together. So there's a small fee to it, even though it's not that high. With the individual shares, you don't have any of those costs. You only pay a fee when you buy or sell a share. The benefit of the individual share is also because before you buy a share, you would really look at the company's performance, past performance, even though it does not really represent what will happen in the future. It gives you a clear understanding of what has happened in the past and what might happen in the future. But the stock market is very volatile, and we all know that a company might have done very, very well in the past 10 years. However, it does not mean that the company will do exceptionally well in the coming years. So when selecting a company, there are many factors you need to consider, especially as an individual share buyer. You need to consider a lot of factors and be sure that the company that you're buying a share in, or that you are willing to risk your money for, is really gonna get you returns on your investment. Because isn't that what we all want to do? You don't invest to not get anything out. So you have to make sure that the company, not really make sure because you don't really have control over it, but just you have to do your due diligence in order to make sure that this company can actually get you the returns on your investment. However, with buying individual shares, because you have done so much research, you might get emotionally attached to what you're buying. So you might be very invested in how the company performs. It can get overwhelming, emotionally overwhelming at times, where you see a company is not performing probably in this month and you want to pull out. Hence why your emotions need to be in check when you do buy individual shares. You don't make emotional decisions when you buy or sell a share, because it can cost you a lot of money. With the individual shares, it's a little difficult to diversify, only because you buy single shares. If you don't have a lot of money at hand, you would have to spend a lot of money to buy individual shares of different companies, and the different companies have different share prices. That might cost you a little more, and that might then result in you not being able to diversify your portfolio as you would like, which is another feature that the ETFs gives you, because you can buy a single share in an ETF and still own part of 500 companies or 40 companies, depending on the ETF that you're buying. Thank you for staying till the end. This was a short video on individual shares versus ETFs. Please do let me know which method or which investment vehicle you're currently on, and maybe you can give us some tips on how we can go ahead and invest in these different investment vehicles out there. I'll be putting on more videos like this. Please stay tuned on the channel and watch out for more videos. Thank you.